Good morning, and thank you for being here for the Hedge Invest Newman Credit Fund monthly update. Month of February was a positive month for us. We're up around 100 basis point, predominantly on special situation. Telecom Italia continues to perform strongly for us. We like the story, we like the assets. We think is benefiting from some operational improvements and a reduction in the overall level of credit spread. At the same time, we think TI will very likely either sell the network, the fixed network, or alternatively possibly even be taken completely private and then split between Service Co and Netco farther down the line. We think there's a big upside on the equity, while on the credit we remain quite cautious because obviously it becomes quite binary in terms of the direction of where credit is going to go and the leverage on the resulting entity. We also did pretty well on our banking and financial sector relative value trades. We've done well on Monte dei Paschi and some other 81 and lower tier 2 position, while we remain quite negative on the UK financial system, where we see a very strong inflation picture. We lost money on Oi Brazil. They officially entered into proceedings. The bonds are kind of overdone. They went down into the sevens. As of now in March, I think we will see the details of the plan. We are quite positive on Oi Brazil, both on the recovery value in case of liquidation, but also most importantly, the restructuring upside that we see into the 2030, possibly even more, depending on the improvement on the Brazilian fiber optic network, of which they still own a large chunk. Away from that, on the market, we kept on losing money on the macro shorts. We are quite skeptical in terms of the absolute value of both credit and equity. We think credit is in percentages of spread is becoming minimal, doesn't really offer much of a buffer. Equity seems very high, seems to price in a Goldilocks where interest rates will not be that bad, but at the same time, inflation is going to be controlled and we're not going to experience any recession. We think the reality is that we're living through a very passive quantitative tightening. Probably we're still into the midst of a quantitative easing because ECB is still pumping lots of money. The United States is effectively pumping more money because of the debt ceiling restriction on new supply of debt. Bank of Japan is clearly pumping lots of money, similarly with Bank of China. So the only truly QT kind of central bank at the moment is Bank of England. So we do think and we do expect the next few months to be critical in terms of the change in tone from the ECB and then possibly Bank of Japan further down. So we remain quite worried about liquidity squeeze into the next few months. When exactly is going to be difficult to predict. Could be April, May, could be September, October, but it's definitely unavoidable. At the same time, we see plenty of opportunity in credit, stress, distress, special situation, events. We have a lot of debt equity opportunity out there. At the moment, we're looking at Coinbase, where we really like the bonds and very much dislike the equity. Similarly to names like Ocado, Rolls-Royce, there's a big disconnect between the valuation in the credit markets and the equity market. And I think as volatility is going to go up, credit selection, equity selection will become even more relevant. Thank you.